Welcome to my channel. This is Mario Lloyd, also known as Real Estate Guru PK. On this channel, we talk about my real estate endeavors. We also have the top real estate producers and the top entrepreneurs in the country. Be sure to click the link below with Justin P. with his Support Black Colleges marketing course. Also with Jason White's Crack the Code affiliate link, click that below as well. Also to support the channel, Webull, M1 Finance, Chase, Discover, Robinhood, and Public, a stock trading app. We hope you enjoyed this episode. This is Real Estate Guru PK signing out. Welcome to another edition of the Real Estate Guru podcast. I got a special guest. I got Copefield. He's an actual CPA. Where you want to get started at?
Nothing, man. We can start anywhere, man. I'm just happy to be here again, y'all. My name is Carter Copefield. I'm a licensed CPA. Been doing this for about 10 years. And I'm just here to give y'all a game on how to live tax-free, right? You know, my slogan is, I teach entrepreneurs how to live tax-free. And people are like, really? That's possible? I'm like, yeah, it is.
So, Mario's got a whole list of questions. We know you're down here for, you guys were doing a
tour. Yeah,
a tour down here.
Yeah.
So we grabbed him real quick. He's headed out to a flight. And so we just got about a quick 30-minute show. And we're going to try to grab all the info we can.
Hey, I'm going to give all I got.
That's right.
For 30 minutes.
Because he's literally running out of this building and going straight to the plane.
Yeah, but I'm happy to be here, though.
Okay, we'll start on real estate. Everything you can write off, we'll start right there.
Okay. Yeah, so I tell people all the time, like, you know, real estate is the most tax advantage asset that you can ever have. Right? You know, the reason why people are overpaying taxes is because they don't know the rules of the game. So I tell people all the time, like, the tax code was literally made to benefit entrepreneurs and investors. So if you're not an entrepreneur, a real estate investor, stock investor, you can't win the game because you're on the wrong team, right? So one of the things I love to tell people is, like, you need to either start a business, like, you know, I know you own a service-based business, or get into real estate, right? Because these are the two ways that you can save massively on taxes. And one of the best things about real estate is that there's a concept called earn in pocket, lose on paper. And what that means is that through the investment vehicle of real estate, you can literally earn money in real life, but lose money on your tax return, right? So people are like, why Donald Trump not paying taxes? It's like, because he owns all the Trump towers around the world. So if you're a real estate owner, the first thing you need to know is that when you own real estate, you get the tax deduction called depreciation, right? And all depreciation means is that as your property wears and tears over time, it's going to lose value. So the IRS is automatically going to give you a yearly depreciation deduction on your property every year.
Say that again?
I said the IRS is going to give you a yearly depreciation deduction on your property every year. Now, it's crazy. I see some real estate owners' tax returns, and their CPA didn't add the depreciation deduction. They're like literally losing out $1,000 in tax savings. So I would just break down a quick example, if that's okay.
Sure.
For my real estate owners. Okay. Cool. So like I mentioned it before we started recording, I own a property in Chicago. It's a 3-flat property. It costs about $500,000. Right. So that property profit is bringing me in about $15,000 a month. So that's about $18,000 a year. And most people are like, okay, cool. But now you have to pay taxes on that $18,000. Wrong. Pay attention, yeah. So with depreciation, the IRS says, hey, take the value of your property, divide it by 27.5. So what's 500,000 divided by 27.5?
Roughly 18,000.
About $18,000. So my depreciation deduction alone is $18,000. My profit is $18,000. So that deduction is going to wipe out all of the income that I just made for the property this year. So I'm literally earning money in my pocket, $18,000 cash money, while my tax return is, let's say, like a $500 loss, or a couple $100 loss, because all the deductions that came with that $18,000.
What else can you write off on that property?
That's just one thing, right?
Yeah.
You can write off the interest on your mortgage, property taxes, management fees. I have a management company that manages my property. Every time I fly to Chicago, I get to write off that flight because I'm going to check on my property, right? I do a drive-by, make sure everything's looking good. The tenants don't know I own it, so I'm not going to shake hands, but I'm going to drive past. So now every time I fly out to Chicago to see my family, I can write it off because I'm also going to check on my property. So there's so many expenses that you can write off in addition to your depreciation when you own a real estate property.
Okay. I call it phantom write-offs.
Phantom write-offs?
Phantom write-offs.
I love it.
I call it phantom write-offs. So if you're making money, you want to own a lot of property. Mm-hmm. That's just rule of thumb.
Rule of thumb: the more property you own, the more money you make, the less taxes you pay.
Can you talk about the Airbnb write-offs?
Airbnb write-offs. So it's dope because this past decade we've been moving from this long-term rental model to this short-term rental model, and what most people don't know is that Airbnb is a business, right? It's not just a real estate property, investment. It is a legit business.
Service business.
It's a service business. Yep. You need to operate it as so.
Yep.
So if you have an Airbnb, you need to put that in the LLC and operate it as a business because you get cash flow coming in from your rentals, but you also get money coming out like the rent expenses, your daily maids to come clean the property, Airbnb's fees. So you need to operate it as if it's an actual service-based business. And the dope thing about Airbnbs is the same thing, but you can get into Airbnbs without having to own a property. Mm-hmm. So instead of having to put $50,000 down payment on a property, you can use that $50K as for rent deposits, right, and then use the rest of the money to actually orchestrate and put furniture in the Airbnbs. And now you're able to own multiple properties and make money, but also save on taxes because every state that you own an Airbnb property in, if you fly there, that's a tax write-off. Mm-hmm. The furniture is a tax write-off. Mm-hmm. The using your cell phone is a write-off. People calling you on your phone, or you have the app to check on your people. And now we're moving a lot of what I call, I love moving all my personal expenses into business expenses because I want the IRS paying for like my lifestyle if I can do that. Right?
Can you explain the difference between an LLC and an SCorp?
That's a phenomenal question. So, a lot of people ask me this question like, hey, LLC, SCorp, what should I start off being? So I created like this what I call like the business flow chart, right? And when to get which entity and why it makes sense. So when you're starting your business, when you just have a business idea and you haven't started the business yet, it's okay for you to stay a sole proprietor because you're still formulating the business. Mm-hmm. Before you start selling your service or your product, you need to incorporate into an LLC. LLC is like the starting out entity for entrepreneurs, right? Because it gives you a few things. Number one, it gives you asset protection, right? So now you're putting a layer between your personal assets and your business assets. Two, it gives you actual legitimate business name, and you can get an EIN, which is your employer identification number. These two things allow you to go open up a business bank account, which is every business owner needs a business bank account. You got a business bank account?
Yeah.
For sure.
Yeah.
Right. So an LLC is fine, and I want you all to stay at an LLC until you start making over $40,000 in net income. Okay. Net income, not gross.
Not gross.
Not gross.
Income.
Net income. So all your revenue minus your expenses, write-offs, and whatever's left is your net income. Once that net income is over $40,000, you want to upgrade to an S corporation because the S corporation is going to allow you to save on self-employment taxes. So most people think they only pay federal taxes and state taxes.
So essentially, you're double taxed.
Yeah, exactly. So you're paying federal, you're paying state, and self-employment taxes is another 15%.
Yep.
You know what I'm saying? So if your state taxes is 5%, your federal taxes is 25%. Plus FICA, now you're paying 45.3% in taxes on all the income you make. That's crazy, right? So an S corporation will allow you to mitigate majority of those self-employment taxes, guys. So it's really simple. LLC, when you first start out with your business, once you start making over $40,000 net income, I want you to upgrade to an S corporation, and it'll help you save on self-employment taxes.
I'm not trying to get political, but who's more for businesses? Democrats or Republicans?
Republicans is not close. Okay. It's not close. I mean, I'm personally a Democrat, but when a Republican's in office, I'm making and saving a lot of money. You know what I'm saying? Like, you say what you want about Trump, but those years were good for me.
Chappelle said it.
Yeah.
Chappelle said it.
Yeah, exactly. And on that, right? So one thing that happened when Trump was in office was this new Tax Cuts and Jobs Act, right? In 2018 or whatever. So what this act did, it gave business owners tax deductions on steroids.
Okay.
So 2 major things that happened. Number one, it's called the QBI deduction. All it means is that if you're a business owner, you get an extra 20% tax deduction on whatever your net income is. Mm-hmm. You have to do nothing else. So if you made $100,000 in your business, the QBI deduction, you're going to get a $20,000 tax deduction just for being a business owner. And this is what I'm saying, like the tax code is made to benefit entrepreneurs and investors. So that's one major thing, right? The 20% tax deduction. The other major thing that he did was he implemented what's called bonus depreciation for vehicles. Mm-hmm. Have y'all seen on Instagram the whole like get a G-Wagon and write it off and all that stuff like that? 6,000 pounds. So
that changed the game.
Changed the game. So basically, I just got a new Mercedes-Benz AMG truck because of that deduction, right? So in a nutshell, y'all, what all that means is that if you were to get a car and use it for your business,
over 6,000 pounds,
and that car happens to weigh over 6,000 pounds, and guys, I want you to Google the car's gross weight, not curb weight. It's a difference. The gross weight is what the IRS uses. So if your car is over 6,000 pounds, and let's say the car was worth $100,000, right? You financed it, you put $10,000 down, you financed the rest, but the car's value is $100K, you get a $100,000 tax deduction the year that you get the car.
Right. Say that again.
You get a $100,000 tax. So for instance, I'm gonna give you all an example. This really happened, right?
Yeah.
One of my students in my mentorship, they had about $100,000 in net income in their business, like 110, right? Mm-hmm. And I told them what their tax bill was going to be, but whatever, 45% of that was. And I was like, do you need a new vehicle? They were like, yeah. I was like, okay. It was like December 19th. I'm like, go to the dealership and get a car over 6,000 pounds.
Right.
They got a car, like a BMW truck. It was about $115,000. Mm-hmm. They were able to write the whole thing off. So her tax bill before she got the car was going to be about $38,000.
Now it's negative.
Now it's negative. So getting the car of her dreams literally saved her almost $40,000 in taxes, and now she can use the extra $40K to reinvest in her business, reinvest in the marketing, help her business grow. So if you know how to play the tax game, like, it's a cheat code to like speed track your success.
Did you hear about the Grant Cardone play when he rode off the jet?
Yes. I went to the Grant Cardone conference that same year, the 10X conference, the year he did that, and that's what I'm saying, y'all. Like,
is that one of your goals to get a jet?
Yeah. I won't put no ceilings on my goals, but like,
okay.
I need you all just to pay attention to like that, just the mindset of that, right? Having information is so important.
Correct.
Right? He had good CPAs in his corner, and I know he pays them well because the more you learn, the more you earn, right? Mm-hmm. Like, information changes situations, and the fact that he had purchased a $150 million jet the year right before tax season, right before the end of the year, just so he can save $100-some million, and now that jet is a great marketing expense, things like that. It's just genius stuff.
I know you're not hireable. I know you're not. Would you let Grant Cardone hire you?
But I let Grant Cardone hire me. Yes, just to be in the room with him. It's not even about the money. It's not about the money. I would just like let me just spend time with you, bro. Like, you know what I'm saying? And yeah, relationships are always your greatest resource. So yeah.
So when people talk like that, it may come off as braggadocious, right? It may come off as like, you got a new car this year, you got a new car this year, I got a new car this year. Yeah. But there's actually reasons behind it when you're an entrepreneur. If you're making the right moves and you're making the right money, there are reasons behind the moves that you make. And he's touching on them right now. He's saying you got to go buy. Now, don't buy yourself a new car if it's not in the budget or you
don't buy that you can afford.
Yeah.
But I love the way you said it. So I have a slogan that says, you buy things to show off, I buy things to write off. We're not the same.
That's right.
Right? So it's okay to flex, but let's flex smartly.
Yeah.
Right? Like, my flex is not getting the car. My flex is that car saved me $50,000 in taxes. Mm-hmm. That's my flex. You know what I'm saying? So I encourage business owners, like, just flex different, right? If you're going to do something, make sure it's an actual profitable outcome to making that purchase or making that move. You know what I'm saying? If we just, if we do that as entrepreneurs, we can't lose.
Yeah. So, in my experience, most CPAs, right, are not necessarily reaching out to you and telling you, this is what you got to do, Josh. This is what you got to do, Mario. This is what you got to do, Carter. Mm-hmm. They're almost sitting back and they're waiting for you to tell them what to do. And I believe that there is a breakdown there because entrepreneurs, is Mario the best at knowing tax codes and
his
laws.
job is not to know this. His job is to be
That's
the
not
best
his job.
in his niche, in his industry.
That's right. It's not his job. You'll never be an expert at it because that's what you do. So in experience, you can literally lose thousands upon thousands of dollars because your CPA didn't go out and say, "Hey, this is what you got to do next."
You know the reason for that?
How do you fix that?
Because first of all, most CPAs are reactive and not proactive, right? Because they just so first of all, it's the difference between a tax preparer and a CPA. So a lot of people are just preparing taxes, right? But what people don't know is that there's 2 tax seasons, right? There's tax planning season and then there's tax paying season, right? Tax paying season is January through April. Tax planning season is October through December. Like, if you take care of business during tax planning season, you won't have to worry during tax paying season. And the reason why most CPAs are lazy is they haven't found a structure on how to charge people to give proactive advice, right? Like if somebody's not paying you throughout the year to tell them what to do, you're not going to do that, right? So I think the how you bridge the gap is CPAs need to find a way to charge clients throughout the year a retainer for their services. And so what I do with my mentees is that, I have a mentorship program where we're meeting twice a month and I'm giving them all the plays they need to run throughout the year. And my thing is this: if I don't save you more money than I cost you, I'll give you your money back. Because I saw that there was a gap in proactive advice. So I want to come up with a program where I'm literally giving you proactive advice twice a month so that you can implement this through the whole year, and you can still have your accountant prepared. I'm not preparing your taxes.
That's right. Yeah.
But now you have all the game to be knowledgeable to bring this stuff back to your CPAs. Like, why aren't you telling me this? Oh, we're going to implement the play on getting the car. We're going to implement the play on paying my kids, stuff like that from my business.
They look at you crazy when you do that. It's like all of a sudden, like, well, where'd you get this information?
Yeah, right. Some CPAs get upset. Like, who's giving you the information? Because they're lazy and they don't want to study the code, right? They just want to get the tax prepared and get the bill. But like, I believe in service. I believe the more you serve, the more universe will give back to you. And I want to help entrepreneurs grow their business faster, because if I can save you extra $50K a year, how much faster will your business grow? Right? So I think that if other CPAs can find a way to get paid throughout the year and rewarded for being proactive, then I think that it'll help bridge the gap.
Can you explain the tax weekend travel play?
You've been studying.
Yeah.
Great. So here's the play on how to turn any personal trip, right, to a legitimate business deductible business trip, right? So let's say you and the boys are going to Miami for somebody's bachelor party, right? Y'all flying in on Friday, y'all getting turned, y'all leaving on Sunday. That's a personal trip, right? Right. But Josh, I would encourage you, like, you going there on Friday, bro. You're a very successful man. Go find a client or a business partner in Miami, right? You probably know some people in Miami.
Yep.
Go to lunch, pay for the lunch, have a business strategy session, right?
Yep.
Cool, and then go turn up, right?
Yep.
And then instead of flying home on Sunday, I tell the wife, I want you to stay until Monday, right? And I want you to do that same thing. I want you to find another partner or another business colleague and have another business strategy session, right? On Monday, then go home.
Yeah.
Because you had business activity on that Friday and you had some business activity on that Monday, the IRS doesn't care what you do over the weekend because you had to be there on Monday. So that makes the flight to Miami 100% tax deductible. That makes the hotel or Airbnb in Miami 100% deductible. And those business meals that you paid for, they're 100% deductible as well. So now you just turned this personal trip into a business trip, and you still got to have fun.
That's 100% right.
That concept is called wrapping a weekend. If you haven't ran the play, run the play.
How much did you write out for this trip right here?
This is an expensive trip. This is an expensive trip. I wrote off about $6K with the flight, my videographer, my team, the cost of the event, and just like doing a lot of content, renting spaces out. So, but again, I got to kick it in Houston. I got to make a big difference. I got to meet you all. I got to do this amazing podcast, and my business funded the whole thing.
Yeah. Can you explain tax loss harvesting?
Oh, okay. Yeah. So tax loss harvesting is a concept for stock investors.
Okay.
Right. And what that basically means is that if you were to buy, let's say you bought a stock, right, and you were to sell it at a loss, right, and IRS would normally So I'm gonna explain a little bit better than that. You bought a stock in January for $10,000, and in December that stock is now worth $6,000. It was a bad year.
Yep.
And most people will hold on to that, right? But if you sold it before December, you can capture that $4,000 loss, and then you can rebuy that stock 31 days later and still be in your position.
Gotcha.
Right? So you can sell that stock at a loss, get a $4,000 tax deduction, then rebuy it 31 days later, and then hold it again, and then get the appreciation over time. But most people don't think to sell before at the end of the, because if you don't sell it, you don't recognize the loss. It's only a fictional loss. But if you sell it before the end of the year, so you all need to be looking at your stock portfolio and say like, hey, what do I own that is at a loss right now? You can sell it, but you have to wait 31 days before you buy it back, and that's okay because you get to capture that loss at the end of the year.
Can you explain the?
I mean, he got the loaded. He got the trigger. Bah, 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 bah.
Got the Drake phone with the notes.
Right. With the scroll on the side. You know what I'm saying?
Can you explain the nonprofits? The play for that. The tax write-off for the nonprofit.
Oh, I was say I don't do nonprofit taxes, but I know what you're talking about. Did you study my page or something before coming here? So yeah, y'all. So I believe that the secret to living is giving, right? And I actually dedicate 8% of all the money I make in my business to the various not-for-profits and various churches and stuff like that. And originally the tax code says you can't write off charitable donations in your business. You can only write it off as an itemized deduction. But with the recent tax change, it takes a long time to do that. So I'm like, how can I? Because before I spend any money in my business, my question is, how can I write this off, right? So I'm doing some thinking in my apartment, reading this book, and it hit me like a ton of bricks. So if you are donating to a non-for-profit, again, normally you cannot write that off. But I would encourage you, instead of just donating, I would encourage you to donate, but then get a big check made, right? Go to that non-for-profit and take a picture with the owners, with the big check. I made $10,000, I donated $10,000. I want you to now take that picture and promote it on all social media platforms, your Instagram, your Twitter, your Facebook. If you do this, you now can just not write it off as donations, but you're not going to write it off as promotional expense, because that type of PR can bring future clients, future business, future opportunities. So once I realized that, I started making donations. But I will always go fly to the place or get a picture made with the person so that I can post it on social media and now write off that expense as promotional expense.
Genius.
Like I just try. I just think and I execute. You know what I'm saying?
Yeah.
Well, can you talk about your portfolio? The stuff you brought last year. And
which portfolio?
The stuff you got in Chicago.
The real estate portfolio.
Yeah. And then you got stocks too?
Yeah, I got everything.
Okay.
I mean, like a dollar not moving is a dollar losing.
That's right.
Right?
Yeah, just break down your portfolio like in the do's and don'ts, like real quick. Like
okay.
Get like 10 minutes.
Okay, I got you.
Oh,
1 minute. Like the catch.
Right. I'll break it down for the people because I think it's very important. Y'all, first of all, inflation last year was at a record high, 7%.
Bananas.
So if you left $100,000 in a savings account, you lost $7,000 last year,
money, yeah.
which is insanity, right? So I want to encourage people to know a dollar not moving is a dollar losing. So I invest all of my excess capital, right, in across various avenues. So number one, my stock portfolio. If you're investing in stocks and you don't know what you're doing, simply get an index fund. You can get an index fund that owns every single stock in the United States, right? And all that means is that you own a piece of everything. So if the market goes up, you win. And if Amazon does great, but Google doesn't, it's a balance. So invest in index funds. If you don't know what you're doing, but I own index funds, I own individual stocks as well. So I have a hefty stock portfolio. I'll probably say that 50% of my money is in stocks. Another about 30% is in crypto. And
you got crypto?
Oh yeah, I mean, because again, if you're young, you have a long investment horizon. I have a high risk tolerance. I just turned 30 years old.
Oh, for real?
Yeah. So I got 35 years to invest before I reach retirement age, right? So I have a crypto portfolio which has been doing very well, and I also have a real estate portfolio which, as I mentioned, I have 2 3-flat properties in Chicago that bring in good cash flow. And when you own real estate, So my real estate portfolio is my tax deduction portfolio. So all my other assets are making money. The real estate portfolios help bringing the tax liability down.
Phantom write-offs,
right? So and with stocks as well, you can invest in tax advantage retirement accounts. Mm-hmm. So now, if you're a business owner, you can open up a SEP IRA or a solo 401k and invest your stock money there, right? Mm-hmm. We want to think about ways that we can earn money but still lower our tax liability at the same time. So stocks, crypto, real estate. And I think my brand is an investment too. Like, I invest a lot of money into my brand because it pays a high dividend, and I want to be known, and I want to be relevant for a long time.
Mm-hmm. Yeah. You will be. Yeah.
What about IRAs? How much you got in there?
So I have. So first of all, let's talk about. Can I give a Roth IRA strategy?
Yeah.
Okay. So first of all, y'all, Roth IRA is a way for you to invest money now, and that money will never be taxed in the future. And the max you can put into the IRA is $6,000. $6,000 per year.
$6,000.
Right. Problem is, when you make over $130,000 and you're single, you can't invest in the Roth IRA no more because you make too much money, right? And they don't want wealthy people to taking advantage of it.
What do you recommend?
So it's something called a backdoor Roth IRA, right? So basically, you can backdoor into it. So I'll give you all the strategy. And I don't think I gave this away for free on the podcast before. So
let's go. Take notes.
So again, there's a limit on Roth. There's a limit on Roth contributions if your income is over 130K. Okay. So what you're going to do instead, you're going to call up TD Ameritrade or whoever your IRA is with, and you're going to say, hey, I want to open up a non-deductible IRA.
Okay.
Right. Invest $6,000. So they open it. You put $6,000 there. And then you call the next day and say, hey, that non-deductible IRA I opened yesterday? I want to convert it to a Roth IRA.
Okay.
And then they'll convert it for you. So there's no limits on Roth conversions. There's only limit on Roth contributions.
Gotcha.
So even if you earn $1 million, you can open up a non-deductible IRA, then convert it to a Roth, and then invest it. Mm-hmm. So that's called a backdoor, a Roth IRA, and I think everybody should use it if their income exceeds that limit.
On a SEP, what's the max contribution a year?
So there's no income max on the SEP, but there is a
contribution max, right?
Contribution max, and that is $60,500. So I recommend business owners get a SEP IRA or a solo 401k. Ooh, can I give y'all gigs to play?
Yeah.
Y'all in real estate, right?
Yeah.
So when you have like IRAs and 401ks, you only can invest in the stock market with those.
All right.
Right? Because you open them up at your Schwab, your TD Ameritrade, your Vanguard, right? But there's this thing called a self-directed IRA.
Yep.
And most people don't know what that is. Basically, if you open up a self-directed IRA, you can fund it. You can open up a self-directed SEP IRA.
Yep.
You can fund it with $60,000.
Yep. Fully funded.
Mm-hmm. And then you can go invest in whatever the heck you want to invest in. So now you can take this $60,000 SEP IRA and go buy real estate with it, right? You can go buy cryptocurrency with it. You can self-direct your money in whatever asset that you're most comfortable with. So the reason why a lot of real estate people don't have IRAs and 401ks is because they think they can only invest in stocks and they're not comfortable doing that. But if you're a real estate owner, open up a self-directed IRA and then self-direct your money into your real estate investments.
Can you explain custodial fees?
Well, custodial fees are fees that are with that specific custodian, right? So, like, if you open up a account at Charles Schwab, they might have fees for investing in assets outside of Charles Schwab. Okay. Right? And most brokers are getting away from that because it's just a stream. Once Robinhood came out and started doing free trading, it was over. It was like, all right, now everybody got to do it. You know what I'm saying?
So you tell everyone that's watching the podcast where you come in, where your asset to other investors, other entrepreneurs. There's a ton of right now. Entrepreneurship is big. Is big, right?
Big, yeah.
Everybody wants to be an Airbnb owner. Everybody wants to arbitrage. Where do you come into play as an asset to the people?
Yeah, so I think I come in as an asset when business owners like start making money, right? Because once you start making money, my job is to help you keep it. Simply, right? So every entrepreneur, they get excited. I want to make the bag. I want to make the bag. I want to make the bag. But when they see that first tax bill, they're like, oh, yeah, right. I'm like, I want to help you make the bag and keep the bag. So any entrepreneurs out there that start to earn, more money with their business and they want to keep it all, that's where I come in. So that's why I created my mentorship program. Literally, I have 40 entrepreneurs in there. We meet twice a month, and I give them different strategies every single meeting, and they're able to ask me questions and bounce ideas off of, and then they're able to get information from other entrepreneurs as well. So now I'm doing my best to bridge this gap of high earning entrepreneurs and lazy CPAs, right? So
we talked about that earlier.
Yeah.
So as a business owner and entrepreneur, same with Mario. I believe that there is somewhere you have to get information from. You have to get that info. Seems like a good source, great source of information, and you take that information back to your CPA because you're probably unhireable, like Mario said.
Yeah, I don't do one.
That's right. Carter is not going to be your CPA, but he's going to be your advisor.
Yeah.
And so you take that information back to your CPA and say, this is what I was told, or this is what I know, this is what I read. And then you can push your CPA or your tax preparer, or whoever does your information or your tax preparation, all the other strategies you do, to say, this is what I need to be doing.
Yeah.
We talked earlier about the vehicle allowance, buying the car.
And I'm teaching them how to do it. So they don't even have to go to their CPA about it. They just do it. Yeah. And then they give their CPA the paperwork. This is what I did last year without your help. You know what I'm saying? Yeah. I paid my kids for my business. I got my car. I've been writing off my travel. I've been writing off my meals, all that stuff. Here is my here's my numbers. Here's the information you need. Do your job and file my taxes. Yeah.
Because they don't do that.
They don't do that.
Period.
Yeah.
I need to know that just one more play that the tax-free shopping spree.
Oh man, you getting all my game, man. Hey, look, this man here. So it's funny that you mentioned that, right? So can you give me that back, please? So one of the reasons why this trip was expensive because it's $2,000 ass bag, right? So I got this, when I got here, but this is a work bag. So this is going to be a business deductible work expense. I'm going to carry my luggage in this bag. I'm going to carry my computer in this bag, but also I'm going to get my logo for my business visibly stitched on the front of this bag. Because if you go shopping, whether it's clothes, whether it's bags or purse, if you get your logo visibly stitched on the merch, it's now a business expense because the IRS allows that this is like a walking marketing piece for you, right? So when you go shopping, y'all go shopping, but then pay for the expense, pay for the item out of your business, get your logo visibly stitched. Not only will the item be deductible and the stitching costs be deductible, every time you take that garment to the cleaners, it's tax deductible as well. Yeah. Okay. So if you were to get your logo right on this shirt,
so right there.
My man.
So those are all strategies.
Yeah.
Those are all things that when you take a look at big business, those are all the things that they do. We as entrepreneurs and we're the new generation. We've got to start taking advantage of those things.
You see, Greg Cardone got the 10X and all on his jet. He wrapped the Rolls Royce and all in 10X.
There's a reason for that.
It's a reason for all that, man. When you have your logo, your brand visibly pressed on something, that's now a marketing vehicle.
That's right.
You know what I'm saying? It's now a marketing piece. So we just gotta think smart, man. Think smart.
All right, do a quick little either or, then we'll get out of here.
Okay.
All right. Rental property or Airbnb?
Rental property.
Stocks or NFTs?
Stocks.
Earn your leisure or sleepers for suckers?
I'll fuck with Shan, sleepers for suckers. I'll mess with Shan's hard. I mean, I love both, but yeah.
Money or equity?
Equity.
2 million followers or rental property?
2 million followers, I can monetize those followers.
Okay. 850 credit score or $1 million?
$1 million.
Tour or Airbnb?
Airbnb.
Okay. Business account or regular checking account?
Business account all day.
LLC or SCorp?
SCorp. Thanks.
Business credit card or regular credit card?
Business.
Neo or David Shands?
Neo's my personal mentor, so I gotta go Neo. That's my dog though. That's my dog.
The boat goat or Ellie talks money?
Why would you make me do that? Why would you make me do that? I gotta go Ellie, man. Ellie, my sister, man. Like, let me tell y'all something. If y'all haven't, tuned in to Ellie Talks Money, man, she's Talk about grinder, bro.
Mm-hmm.
So I spent the last 48 hours with her. You know, we've been staying in the same Airbnb, and I thought I worked hard.
Yeah.
No.
It's levels to this. Ooh. It is levels to this when it comes to working hard, creating content. It's just levels, and you want to surround yourself with people that make you feel like you're not working hard enough. You know what I'm saying? So that's my goal this year. But shout out my dog too.
Okay. Atlanta Hair Doctor, CEO, First Lady.
CEO, First Lady.
Okay. Marvin Mitchell, Kamoy Martin.
Come on, man. That's my dogs. Kamoy, my G. He actually did a class for my. Hey, y'all want an Airbnb? Kamoy's that guy.
Kamoy.
Yeah.
All right. Donnie Wiggins or Alex Good Energy.
Donnie. Yeah. I like them both. There's no diss, but like, you know, I actually got to meet Donnie before, so.
Rich Dad, Poor Dad or Profit First?
Rich Dad, Poor Dad. That's the book that actually got me on my job. Mm-hmm. I read that book and I quit like 2 days later.
LA or Chicago?
Chicago, man. Come on out.
You live in LA right now?
I live in LA right now, but ain't nothing like summertime shot, bro. You know what I'm saying?
No, there is not. Yeah, summertime in downtown Chicago is beautiful.
Man, that's been my pride and joy right there.
Man, appreciate you, man. Hey, next time we'll get your
next time we come back, I'll do a longer episode and I'll give some more game.
I've got a ton of questions for business owners that are making money.
Yeah.
All sorts of stuff that have to happen.
Yeah.
All sorts of stuff.
We go run it back.
Tell everybody where to find you.
All right, guys. So actually, I got a free gift for you all because I love your audience. You know, I love you all doing here. So if you text the word tax to 312-847-2309, I'm gonna give everybody that does that a free copy of my ultimate tax saving guide. Right, I have all the hacks in there, links to videos. Everything is a great starter for everybody out there. So again, text the word tax to 312-847-2309. You can get the free guide.
Appreciate you, man. Thank you so much.
I got y'all, man.
Thank you.
Come on, man.
Good to have you.
We out.
That's a wrap.